Hello, good day. My name is Jalal Daburg, and I'm back again to bring you all this week review and also the updates that will be helping you to take part in the financial markets in an appropriate manner. Having a look at on the current situation of COVID-19 pandemic is continuously spreading around the globe, and more than 200,000 cases are being registered every day worldwide. However, mortality numbers in US states that are affected by the new strike of the pandemic are stepping back from previous record values that we saw. This is why the pandemic has limited effect on the markets. United States is considering limited retaliatory measures against China after Chinese authorities imposed national security law on Hong Kong to limit its semi-autonomous status. Investors fear that the full-scale actions from the US side could lead to a new turn of trade tension between two world largest economies, and that such situations and actions could harm consumers and American businesses in the country. So these would say that palliative actions may signal that the US government is not ready for a full-fledged conflict with China, and the tensions between the two nations will remain within simmering trade squabble. Nevertheless, fears of a wide-scale measures that could be imposed in the US and some other regions worldwide to contain the virus nudge safe haven assets higher. Talking about gold, gold has broken through the level of about 1800 per troy ounce last week but pulled back a little last week. However, the target is somewhere around 1920 per troy ounce remains intact with $1,814 per troy ounce as an intermediate target. Now, talking about US Treasuries yield remains around 0.65% as well. So, world stock markets perform positive dynamic at the start of this week as corporate earnings session has begun. Investors ignore pandemic news since they are closely monitoring financial results of American companies. The consensus average EPS forecast of S&P 500 listed companies shows a 30% decline in the company's profits as well. So investors are concerned over economy recovery perspectives in the second half of 2020, and they will look for an additional signs of it in corporate earnings performance. US broad market S&P 500 index made another special gain, climbing almost about 3,233.13 points. This level would be certainly tested this week, and once broken the all-time high record of 3393.52 points, this will be within swift reach. Now, having a look at the oil market, we'll be keeping track of OPEC joint ministerial monitoring committee meeting this week. So basic scenario suggests that OPEC may increase production by 2 million barrels per day starting by August 1. Nevertheless, there are reasons to believe OPEC may leave current production cuts at about 9.7 million barrels basic points, so which will support crude prices for a longer period of time. However, even OPEC will decide to ease production cuts to 7.7 million. That would hardly have a significant impact on crude prices, as this move is already priced in. The target price of Brent crude remains at $43.93 per barrel, and furthermore, the $46 per barrel to close the March gap. Generally speaking, all key events are concentrated in the second half of the week, and China's GDP for the second quarter 2020 will be released on Thursday and is expected to be above the forecast. European Central Bank will hold a meeting on Thursday ahead of the European leaders meeting on Friday that will discuss remaining issues of the coronavirus recovery fund for the European Union. And that's all for today. We'll be back again to bring you more updates. Till then, stay tuned and have a great trading week.